My name is John Easton. I've been with Maximizer now 18 years. I'm the director of the wealth management division here at Maximizer, and I used to be the director of product management. So about 4.5 years ago, I started working on the wealth management edition, which is a very specific version of Maximizer that we've created for financial advisors. And I did so working with an advisory team of advisors that helped me immensely build the product out to the way that it is today. In speaking today, what I intend to talk about is the tax season, and in many respects, it's very much considered to be an overlooked opportunity. There's really 4 key segments of the market that I'm going to talk about, and how it is that as advisors you should address these 4 different segments. And I'm also going to talk about some tax season tools that are available to you, and how they can help you in doing your job when it comes to doing tax preparation and working with clients. So many advisors I've spoken to think of themselves as a bit unique in some ways in that they are doing tax planning and tax preparation throughout the year. I also certainly have spoken to a good number of advisors that say, well, you know, that's kind of up to the accountant. I don't really understand taxation. I'll do some basic assistance for my clients, but I have an accountant or an accounting firm that I generally recommend. I think that bears out in some of the statistics I'm going to speak about at the beginning here. 46% of Canadians today file their own taxes, and they're doing it without professional help. And when I say professional help, I mean an accountant. A good percentage of these are using online tools today. TurboTax would be an example of that, and to go through and actually go through the process of completing their taxation forms and doing some sort of e-filing. 1 out of 4 have trouble understanding the tax implications of RRSPs. That would probably make sense if they're self-assisting themselves in most regards. 1 out of 3 have trouble understanding the implications of TFSAs. Very true, TFSAs have only been around for about 7 years. RRSPs have been around for a full generation and a half really now. So they're certainly more well understood, but judging by these statistics, a significant percentage of the population does not understand them, and likely they are missing out on deductions today. Your clients in some cases are missing out on deductions today. I think also the flip side of this is when you're doing your own taxes and when you don't understand RRSPs and when you don't understand TFSAs, they probably don't also understand the long-term tax implications of how to save and how to invest. And of course, what this will lead to is having them pay more taxes down the road as well. You know, they're not investing in ways that their gains are being protected. And not everyone, if they're not using an accountant, is going through the thought process of, well, these are my savings, but what's my income going to look like when I retire? And if I have a lot of money set aside in RSPs, and if I'm not maybe having some advanced taxation planning, estate planning, I may not understand the implication of all my RSPs become available to me all at the same time, and as I pull them out, how much tax am I really going to be paying? So this is an opportunity for certain for all advisory firms to pay a little bit more attention to their clients and to provide an extra level of service that their clients are going to appreciate. But I think also, as many advisors have seen, it actually increases the amount of book or wallet share that an advisor is going to get of a client's money by educating on how to save better and doing it with tax savings implications in mind. Right? So how can you help? Strategy, of course. Right? Come up with strategic ways to get your clients investing with you. Right? Help the client estimate their tax situation. Right? In doing so, it helps you give better advice. Use the tax times to discuss opportunities. Right? Explain how you can help them. Right? Keep more of their money. Explain how you can help them invest more and in the right places. And explain how you're helping them achieve their goals. So this is really a bigger part of a financial plan, isn't it? Right? But tax planning should be done and tax preparation should be done every single year. Right? Open up the discussions with your clients using tax time as a springboard. Right? Clients' goals and needs are going to vary from person to person, as you all understand. In today's webinar, I'm going to look at 4 distinct groups that you likely all have in your book of business today and how they are distinctly different, and I have some ideas for what tax time discussions, they're probably most open to and are most applicable to them as a demographic, right? So conversation with 4 key client groups. The first group we'll talk about is the millennials, right? For those of you that have sat through a few of my webinars this year, you know that we've been talking quite extensively about millennials as a demographic and how they're different than the baby boomers, the Generation X and Generation Y. One thing in particular about baby boomers is the millennials, is their financial situation. We've clearly seen they are not saving for retirement. They're not taking advantage of help such as a company's employee contribution matching. My last webinar, I talked about 1 in 3 millennials didn't know whether or not their employer even had a contribution matching program in place, let alone contributing to it. They didn't even know if it existed or not. There's competing demands for millennials' money, without a doubt, right? A good percentage of them, half according to my statistics, own a home already between 19 and 35 years old. And for those that don't own a home, that are renting, 3/4 of them are trying to buy a house or plan to buy a house in the next 5 years. So that's a lot of pressure on their savings. They're conservative investors, without a doubt. They saw the crash of 2008 for sure, and some also saw 2001. They hold less investments in equities than any other generation before them. Right? 27% of millennials are keeping money in cash, all their savings in cash. Right? So if they're squirreling away money in cash, they're probably not optimizing their money for short-term goals, down payments, or mid-term goals, paying down a mortgage, or even long-term goals, retirement. Right? They're not doing anything really smart with their money. And so what is your discussion with a millennial who's a client of yours? Right? There's 3 different scenarios that are pretty obvious. Right? Contribute to your RSPs and withdraw under the home buyer's plan for down payments. Right? And then as they're getting an annual refund, use that annual refund and start putting that away for retirement savings, not for present day savings. A second scenario is have them contribute to their RSPs and use the refund that they're getting every year to pay back down against the mortgage that they already have. And the third one, of course, is contribute to TFSAs now. 1 in 3 don't even know what they are, so they're certainly not contributing to them. And the number is about 50%, from what I understand, do not contribute to TFSAs today. Right? So help them understand that a TFSA is actually not just a place to put cash. It's not a savings account. It's an investment account. They can convert the TFSAs or divert the monthly savings to RSPs, right? When they get into higher tax brackets. So there's different types of scenarios, and there's different types of responses to those scenarios that are appropriate. And you as an advisor just need to help them understand whether they need to consider something with a greater return than sitting at 0% in a bank for some near-term expense that they foresee, such as a travel, and something that's very important about millennials is they're very much in the present generation. They are a lifestyle generation, and they are spending money, they are spending their savings on lifestyle today and foregoing potentially a good retirement because they don't understand that if they don't save for retirement, there will not be money for retirement. There's the employee group out there. This includes the government, of course, and anybody that's working for a private corporation that has a pension plan, right? So this demographic is a little bit different than somebody who's working in the private enterprise world where there is not full pension plans. So their retirement savings are coming from their workplace pension, what they're seeing in forecasting that pension is going to be sufficient for their own modest retirement goals. So they've sort of matched their goals to what they see their pension is going to be able to deliver to them, right? They live in their paid up home, right? And currently they're taking a week or 2 in Florida a year kind of thing, right? Because the retirement savings are already being taken care of, they're certainly more focused on today's goals. So will they owe taxes is something that's interesting to them, right? Their best case scenario is a tax refund check, right? It's like a second annual bonus to them, and they want to use it for a trip or a new TV or something that they can get immediate gratification from. And that's very, very commonplace across this demographic. Your discussion with them should go similarly, right? You identify factors that the employer might not be including in withholding in tax calculations, right? Deductions such as the dependents, deductions related to healthcare, RSP contributions, right? Additional income that they're getting from seasonal part-time work. You need to know if these exist, right? You need to recommend the appropriate tax aversion or diversion type activities, right? This could be an RSP, and in many cases the RSP is the basis for this. And the purpose, of course, is to avoid owing or to get a small refund rather than using the RSP as a long-term plan, right? So you're considering it a different way, or you're putting light on it in a slightly different way than you would with a millennial, right? And if they're purchasing RSPs and they don't have cash, right, consider whether or not an RSP loan actually makes sense for this group, right? If they can apply any refund towards a loan repayment, they can repay the rest of the loan over the next several months, right? And then they can continue putting the same amount of money aside the following year, right? This group needs to actually be a little bit more educated on being disciplined with some of the excess money that they have today, because it could serve them very well in the future. Many pensions aren't indexed, or they're certainly not indexed to the degree that they need to be. So in many cases, this employee group think that they're going to have a fairly nice egg, but that egg might not be worth nearly as much as they think it's going to be, because the cost of living is going to go up so high, potentially over the number of years while they wait to retire. Right? It's important to help this group consider all the tax implications of their total retirement income, right? With their work pension, with their government pension, with their RIFs, right? This group isn't always thinking about their long-term tax situation, but what I've just identified is a situation where they should be paying attention to it, because they're going to be getting a good amount of money all at the same time from various sources, and they may be surprised to find out the tax bracket they're going to be put in and how much taxation they're going to pay on the income that they're going to receive from these different vehicles. There's a group of individuals in the world, in Canada, called the mass affluence. Their situation is a little different than the employee group. Their lifestyle, their situation is they're looking at the lifestyle of people in a higher wealth bracket, and they're a bit of that generation that says, I want what they have, right? So they're in a higher tax bracket right now, and it's hurting them, right? They're saving for retirement is their top worry of it right now that they have, because they want to live a very opulent lifestyle, I suppose, right, while they're retired. Like, goals may include a vacation home, significant travel in their retirement. That's different than an employee group who's going to travel maybe just a few weeks a year, right? So this group is very aspirational, but they're also, in some respects, like a millennial in that they're plagued with competing expenses, right? They've got taxes. They're trying to put into their RSPs. And in many cases, what I understand is this group very much has the feeling that they could be so much farther ahead if only something was different for them. So you as an advisor, your opportunity is your discussion again, is an opportunity to show them how to get where they want to be. I apologize for the typo there. You show them how it is possible to get a vacation home, and how it is possible for them to have a comfortable, active retirement. Right? You show them how to use the RSP strategically to reduce their marginal tax rate. Right? You're being very proactive with them. You're looking at how ownership of a second property, or even a second or third property, investment property, can affect them both positively and negatively. You're going into detail and talking to them about TFSAs, because they are certainly one group that have enough money to be utilizing TFSAs and likely aren't. Right? So being proactive and doing retirement planning with this group, and doing calculations of forward-looking taxation calculations is a good way to get this group focused on where they need to be putting their money. Right? If they understand what they're going to have to pay once they start drawing down on their RSPs and their RFPs, or excuse me, their RIFs, they may realize as well that they're not going to have as much money as they thought they were. Right? And it may be time to be adding more to it right now. Again, understanding how the TFSA is going to work for them is very important, and 1 in 3 of the market doesn't. So that's an opportunity to educate for certainly all of you. The last group is the high net worth client. their situation is planning for today, tomorrow, and beyond, right? For them, tax planning strategies are their major concern. Right? Wealth preservation is the key for a high net worth client. And how much tax they pay can make a big difference in their plans for the future. This group is obviously very long-term focused. They're thinking beyond retirement. They're thinking to inheritance for their children. They're thinking of leaving a legacy. So estate planning is something that must be considered for this group. So your discussions are around the tax planning of non-registered investments as well as registered investments. And this is an important focus. Likely this group is long maxed out and is long maxing out their RSPs. So you're needing to find other places for them to invest that are going to have some sheltered income and some sheltered gains. So higher level strategies are crucial for this group. Right? Many of these group are business owners. Many of these group work with professionals themselves, and you're going to need to work with some of those other professionals that are in their lives. And these can be, these likely are accountants. They may have a real tax strategist, and you're going to need to understand who the other professionals are that these individuals are using, so that you're in sync with the same goals, and you're helping deliver on each other's goals. Certainly if they're using more than one. So you're looking at the bigger picture, and you're working with others to help look at the bigger picture. And certainly this is over the longer term, and you're looking at trusts, and you're looking at different types of income splitting as well as estate planning, as I mentioned before. So what are some tools that can help advisors? Some of these I'm sure you're aware of, and some of you I'm sure use some of these. I would probably ask the question as an advisor, why aren't every one of you using at least one kind of tax calculator? And there's a number on the market. I'm just going to show you a couple of them right now. Fidelity and the link, the URL that you see here, is very much a simple, but it's an effective tax calculator. It does basic tax calculations for you. It allows for you to input your employment income. You can add interest and you'll put in the taxes you paid, the RSP contributions. I've got a screenshot on this page of what you're looking like. So it's very basic, but it's actually quite tidy, right? Where do you live? What's your taxation year? What's your estimated income going to be for the year? Right? Are you bringing in any interest income? How much is it going to be? Any dividend income? How much is it going to be? Any capital gains? So very basic, right? What deductions you will pay this year or have been paying? What are RSP contributions? And there in front of you is going to be, right, what's your balance going to be at this point in time. So what this is nice to do with a client is to juggle around the RSP contribution amount. And as you do so, the balance or the refund, right, balance owing or the refund number is going to change. And it's very, very easy to show a client. If you put in nothing in your RSP, potentially you're going to owe, or you're going to get zero. Your employer's rate on the line. If you put in $5,000, boom, you're getting 40% back on that $2,000. If you put in $7,500, boom, you're getting 40% back on that $3,000. So it's quite helpful and quite useful to be able to have these conversations. You're not acting as an accountant, but you're certainly now putting yourself in a position where you can give some advice around their taxation and their positions. A second calculator is put on by the Knowledge Bureau. This one's a little bit more sophisticated. It allows you to take into account both spouses in a relationship, right? It also has calculations for dependents and other deductions, and it's up to date for 2016. And this is a screenshot of what it looks like. So you can say very similar to the previous, but a little bit more in that I've got a tab for income. My screenshot, is on the deductions tab. There's going to be a federal tax credits and a provincial, but this is very similar for those of you that have done your own taxes. You know this is very, very close to the forms that we use with the Canadian government. But what's nice about this is you can put in both this husband and wife, and you'll be able to see how much tax you should be paying, and depending on how much you have been paying, and how much your RSP contributions are going to be, what kind of return you could conceivably be getting. And the third one I've got up for you today is an Ernst & Young tax calculator. This is a little bit more sophisticated in some ways. It's a table format. You plug in your income, you instantly see your tax. It gives you your various tax rates and marginal tax rates. It's not nearly as extensive as the previous one. This one, as you can see here, is very much about, enter your taxable income, and it's going to give you some percentages based on your tax rate, after-tax income, marginal tax rate, etc. And it has a second place of a basic RRSP calculator. And what you're doing in here, of course, is what's your taxable income, what's your RRSP contribution, what savings should you get directly related to that RRSP contribution. Again, very handy and helpful. All advisors make the point when they speak to their clients, of course you're going to save money if you put money into your RRSP, or you'll get money back. This is a way of making that very tangible for the client. So much of what I've been talking about thus far is after you've reached out to your clients and what is it you're going to be doing with them, and what are the benefits of what you're doing with them. So really the precursor to a lot of what I've been saying is you're going to need to have a database, of course, where you're keeping your client information, a CRM like Maximizer or another one, and you need to have it configured specifically for yourself as a wealth management office with functionality related to taxation, estate planning, financial planning. Right? It starts by having segmentation capability. Right? It then takes you into the ability to see all the different information on each of your clients and the different accounts. A CRM is going to let you have template capabilities for the different notifications. It's of course going to give you the area that you're going to want to use to store all your conversations and interactions. I've got a few screenshots of the Maximizer Wealth Management Edition. One of the things that makes our product a little better than some others in this regard is the household view capability we have. So I can see information on each and every client that I have, but I can see information on each and every family member as well. Right? So I start to get a household, an understanding of all the tax situations for all the persons in the household. One of the strengths of the Wealth Management Edition, and it's not lost in what we're talking about today, is really having a vast number of custom fields that are being used to track a large amount of personal and basic information on each and every one of your clients and their family members. So Maximizer gone ahead and we've built hundreds of these fields for you to insert your client information, and then we build groupings of these fields. In the latest release, we've added fields for financial planning, for estate planning, for tax planning, and for tax preparation. And we've also put in workflow for that, and I'll show you that in a minute. So by having underneath the personal information, we know information such as how much money this client makes, and based on the amount of money they have, we start to look at giving them a segmentation. So what's their net worth? What's their net worth to the firm? What's the assets under management we have? By being able to track all that, we start to have a better understanding of which of our clients we need to be offering which type of advice to. It also helps me understand which of the 4 basic groups each of my clients belong in. My basic fields are also being used in that regard. You can see part of the way down, I actually come right out and have created a segmentation field. Right? And I've got fields against all the reviews that I would do for my clients. Right? So a financial planning, a KYC, an estate planning. Cut off in this screenshot is actually a tax planning review as well. Maximizer, we're keeping track of when you performed the last review, when you're supposed to perform the next review, and how many days it's been since the last review up until the current date. Right, so we're looking at the elapsed time. You heard me mention I've added new fields now to track the financial plan information. How can you provide taxation advice if you don't know what the plan is for this client? What are their retirement goals? What are their aspirations? What are the competing activities and buying opportunities that they have for the different money? So it's important to have a financial plan and have those fields recorded. It's important to have an estate plan because that's part of the financial plan. How can you provide tax information or tax guidance if you don't understand the long-term implication of your tax guidance and how it's going to affect the estate plan? So you heard me talk of the high net worth individuals. Every one of your high net worth individuals you should be doing an estate plan for, and you should be reviewing that. And likely you, at tax time, October, November, December, would be a great time to review the estate plan, the financial plan, and the tax plan, and get ready for the RSP season and the tax season. We've put in fields in Maximizer now to track what the RSP contribution room is and what the deduction limit is, what the TFSA contribution room is, what the deduction limit is. So now I can start searching on my clients that have a deduction room over a certain amount because I know they have room. I can search for my high net worth clients that have a deduction room. Which of my high net worth clients are not maxing out their TFSA, have not been maxing out their RSPs. That's easily seen if you start to use the fields that I'm showing you. Maximizer has allowed you to build searches. So in adding fields around estate planning, tax planning, and financial planning, I built searches. Bring me a list of my clients that I have a tax review this month or this quarter. Right? And by building those searches, I then use those searches that I've already built and I put the results into my dashboards. So I have a review dashboard that looks exactly like the one I'm showing you. This is showing which of my clients that have any of the following reviews scheduled in the next 30 days. And by clicking on the one that says 5, I'm going to be taken to the 5 clients that I have a tax planning review scheduled for in the next 30 days. So it started with the fields, then I put the searches in place. The searches took me to the dashboards take me to the list of clients I need to work with. Once I know which clients I need to work with, I should have a process for how I go through tax preparation or tax planning, because they're a little bit different. So the Wealth Management Edition has embedded processes, dozens and dozens of them. The latest release, we've added processes around estate planning, financial planning, and tax preparation and planning. So this is an example of the steps within the action plan we created called tax preparation. Right? Ask for information, receive the information, assist with the tax return preparation, review it with the client, right? Have it signed, submitted, and confirmed. Right? That's a tax. All of those activities that get scheduled through an action plan are going to be visible against the client record. In Maximizer, it's under our activity tab. And what I'm looking at now is a list of activities that are related to the tax planning process that I've just gone through with one or all 5 of my clients, as the case may be. We also put in a tax preparation. Sorry, my screenshots are mixed up, but I have one for tax preparation and one for tax planning. What's also important now, as you start to work with each individual client as they're coming into the office, is performing a complete review of the information that you have on the client prior to them coming in. So again, in Maximizer, we store all our conversation notes in a single place. We have ability of categorizing all of our notes. I'm going to go in and I'm going to look for conversations that were around my tax planning for 2015, 2016, or my RSP contributions for 2015, 2016. Right? Any conversations I can search on very quickly and find the ones that were most, or the ones that were relevant to the tax preparation and tax planning. So being able to search inside notes is very important. Similarly with files, right? With notes, we have over 30 different categories. With our files, we have over 30 categories in the software that you can select from. You can see that the top 2 files that I have saved against this account are called reviews, right? And in each of my files, similarly to being able to search inside notes, I can also search all the way inside files looking for any text string, right? So now I can go and bring up a list of all my, and inside, some advisors could go so far as if they're doing tax preparation, like I've shown here, and they're acting as the filing agent, they would be keeping a copy of the tax return on file against each client record under the Files tab here. Right. So having all the information in a single location is obviously extremely valuable, and it's helping you service the client far better than if you weren't collecting this information. I can't imagine an advisor not understanding the tax situation each and every one of their clients are in. I couldn't imagine an advisor not knowing how much each one of his clients make to begin with. So if you're not recording where they work, and if you're not recording their income, right, how can you even get farther down the road to say, oh, and by the way, how much do you pay in taxes right now? And where do you begin having conversations with helping them save money? And if you're not helping them save money through investments, then I think as an advisor, you're missing an opportunity to be more valuable. So this has brought us to the end of the presentation for today. If you have any questions, you can start typing them now into the either the chat area of your screen or the questions area, and I will be able to see both. For those that you have to leave now, I do want to thank you very much for taking the time to listen to my presentation today. The first question I see is, I'm using an earlier version of Maximizer. How do I get the Wealth Management Edition? That's a good question. It's for anyone who's not on the Wealth Management Edition, whether you're on our current version or any previous version, we upgrade the database and we do a conversion on it and we run it through the Wealth Management template, and in doing so you end up with my about 550 custom fields. You end up with all the key field groupings that you saw there, of which there's about 12 or 14. You end up with all the categories for the notes and files. You're going to get 7 dashboards that are specific to the Wealth Management Edition. You're going to get 200 custom fields to hold all the GIC, seg fund, insurance policy, both group and personal information, as well as all the searches that would go with all the policies that we store, as well as all the individual information against all the households. So the conversion generally takes us 24 hours. We make a backup copy of your database. If you're hosting it yourself, you'll need to upgrade to the latest version. If you haven't already, we give you back that backup file. We restore it with you, and then your new version is just now Wealth Management enabled. If you were coming into or going into our cloud, then we just restore that in our data center. We give you your new usernames and passwords. You get a 1-hour orientation session. We sign you up to our free training programs, and you're then using the new system. In either case, it takes us 24 hours to do that. That's a good question. Thank you. Let's see what else we have here. I'm using Goldmine, and I'd like to know if it's possible to get my information out of Goldmine and into Maximizer. That's a good question. Thank you. Yes, it is. Maximizer has been working in the CRM space now for 28 years. Goldmine has been there almost as long, and a long time ago we started writing utilities that allow us to extract all the client information from a Goldmine database. And we're not just taking name, address, phone number. We're taking any custom fields. We're taking the emails that have been saved, the appointments in the past, present, and future, as well as the tasks and the notes. So it's a complete export. And we actually do that for almost all of our competing products. We do that for ACT. We do that with Salesforce. We do that with Microsoft Dynamics, Bill Good Gorilla, and Pareto. So you can see that I've gone very specific into certain wealth solutions, as well as generically into some of our former competitors, if you will. That's a good question. Thank you. John, you mentioned the Wealth Management Edition is in the cloud. Where is your data center? Thank you. That's a good question as well. I think most of you know we're a Canadian company. We're based in Vancouver. The Research and Development Department is here for North America. Well, all global R&D takes place out of the Vancouver office here. Our service team for all the North American market sits in this Vancouver office. Our marketing team, our support team, our professional services team, and our sales team as well. Our data center itself is located in Toronto. It's what's called a Tier 4 data center. The higher the number, the better the data center, and as far as I know, 4 is as high as they go today. It's 100. That company that owns and operates the data center is also a Canadian company. So this is a 100% Canadian owned and operated infrastructure, which, as we very well know, is extremely important to advisors and their Canadian clients. That's a good question. Thank you. I don't see anything else yet. Oh, is this available? Is the Wealth Edition available on an iPhone? Yes. Maximizer has a mobile access product which works on all smartphones and tablets. It works through the browser, so we call ourselves device agnostic, which means I work on all smartphones and tablets. I work through the browsers, and it's an optimized form factor. So the screen excuse me, the icons and everything on the screen is optimized for a smaller screen, but it's a fully functional CRM. It's everything you can do in the wealth management normal product or desktop product. You can do from a smartphone or tablet as well. It supports voice-to-text translation, so any text field inside Maximizer you can speak into, and what you say will be translated into text, and that text will be stored directly into Maximizer. And this is, as it sounds like, a fully functional system. It's not read-only. I can go in and make new records. I can update fields. I can create notes and save them to the client record. I can send email from it, and a copy will be saved into the solution. And all of that's happening on real time. So as I do that, somebody sitting in the office or anywhere else in the world connected to the database can also see all those changes. Yeah, that's a good question as well. Thank you. My email address for anyone who's interested is my first and last name together, John Easton, at maximizer.com. If any of you would like to reach out to me directly, if you have any questions at the conclusion of the webinar today, we have been recording this webinar. We will send a copy to everyone that was in attendance, and you can reply back to that email, or you can send me an email directly if you'd like to speak to me sooner. So I'm going to stop now. I do want to thank everyone again for taking time out of their busy days. I hope you enjoyed the topic for today, and I look forward to speaking to you all again very soon. Thank you for now, and bye-bye.